Welcome back, PipBuddies. By now you've got a broker, you've poked around your trading platform, maybe you've even placed your first demo trade. No judgment if you just stared at buy and sell for about 10 minutes before clicking anything. We've all been there. But here's the next big question. How do you decide what to trade? When to enter? When to exit? Do you flip a coin, read the news, follow your gut? This is where market analysis comes in. And guess what? There isn't just one way to analyze the market. In fact, there are three major lenses traders use to understand what's happening: technical, fundamental, and sentiment. Each one is like a different way of seeing the same forest. One looks at the trees, another studies the soil, the third asks, hey, how do the trees feel today? So let's break these down, not just so you understand them, but so you can actually figure out which one actually fits you as a trader. Now, let's start with the most popular lens, technical analysis. This is the go-to for most retail traders, and for very good reason. It's visual, it's fast, and it gives you a clear method to read price action. Technical analysis is all about looking at the chart, price movements, patterns, indicators, and levels. You're trying to figure out where the market might go based on what it's done in the past. It's like trying to predict someone's next move based on their body language. Supports and resistance levels, trend lines, candlestick patterns, moving averages, these are your tools. Technical traders believe that everything you need to know about the market is already in the price. You don't care why the euro is rising, just that it's bouncing off that trend line again. You're reacting to the chart, not the story behind it. If you love puzzles, patterns, and a more visual structured way of thinking, this might be your lens. Technical analysis can feel like solving a mystery with price action as your clues, and your job is to piece it all together fast enough to make a profit. Now let's flip the lens now. Enter fundamental analysis. This is the economist's playground. Here, we're not just looking at the charts, we're looking at the why. Why is the euro rising? Why is the US dollar falling? What's happening in the world that's shifting the balance between currencies? Fundamental traders dive into things like interest rates, GDP data, unemployment reports, inflation numbers, central bank decisions, political events, basically everything that affects a country's economic health. If you're trading Euro USD, a fundamental trader wants to know what the European Central Bank is planning and how the Federal Reserve will respond. It's like trading currencies based on the underlying story rather than just the chart plot. Fundamentals move the market long term. That's why big institutions and hedge funds often use this lens. They're playing the bigger game. But even if you're a short-term trader, knowing when a major news release is coming can really save you from trading into chaos. If you're into current events, macroeconomics, and connecting global dots, this might be your angle. It's slower paced, but deeply analytical, like chess with currency values. The third lens is the most underrated, but also one of the most powerful. It's called sentiment analysis, and it's all about one thing: how people feel. Back to the trees. Sounds weird, right? Trading on feelings? Oh, well, here's the truth. Markets aren't moved by charts or data. They're moved by people reacting to charts and data. Fear, greed, panic, euphoria. These emotions drive price movements in real time. Sentiment analysis tries to measure the mood of the market. Are most traders long or short right now? Are retail traders piling into one side of the market? Is everyone euphoric after a positive CPI release or fearful before a Fed meeting? Some sentiment traders use tools like the Commitment of Traders report or retail position ratios from brokers. Others just look at how fast price is moving and ask, is this real conviction or is this a herd stampede? Sentiment isn't always logical, but it's often useful. For example, if everyone is long on the euro, there's no one left to buy, which means price might actually drop for you. That's the contrarian mindset. If you're intuitive, emotionally aware, and good at reading between the lines, sentiment might be your secret weapon. Alright, now the golden question. Which one is best for me? Here's the truth. There's no one size fits all here. So some traders swear by technicals and never read a headline. Others build their entire strategy around economic calendars and interest rate cycles. And some blend all three into a beautifully chaotic masterpiece. The key is to find the lens that fits your brain. Are you a visual thinker? You might love technicals. Do you enjoy digging into the news and data? Then fundamentals are calling your name. Are you a people watcher who loves psychology? Sentiment could be your best bet. And don't worry, you're not locked in. Most successful traders start with one lens and slowly integrate into the others over time. You might start by drawing support and resistance levels, but eventually you'll peak at the news before a big decision. That's growth. You don't have to master all three today, but you should know they exist. And now you do. So once you choose your lens, the next step is practice. Open up your demo account, start analyzing the charts, try making calls based on what you see, what you read, or what you sense in the market mood. At first it feels messy, and it might do, but you'll second guess yourself, you'll chase moves you don't even understand, and that's totally normal. Market analysis is part art, part science, and a whole lot of reps, put it that way. The point isn't to be perfect, it's also to get consistent, to develop a process, a routine, a way of looking at the market that makes sense to you. And once that clicks, the fog starts to lift. You won't need someone to tell you when to trade because you'll see it for yourself. So there you have it. 3 lenses, 3 ways to understand the market, and a whole lot of room to find your own groove. In the next video, we're taking your chart skills to the next level as we explore different chart types. Yes, there's more than one, and explain how to actually read them. Candlesticks, bars, lines, they each tell a different story, and you'll want to know how to read them fluently before risking a single dollar. So if this video helped clear things up, do give us a like, drop a comment down below telling us which lens you're most drawn to, and don't forget to subscribe because PipBuddy is just kicking off. Until next time, keep learning, keep testing, and keep sharpening that trader mind.